What's up, guys? In today's video, I'm going to show you an excellent HELOC program that's available in all 50 states. So if you're ready to take advantage of your home equity, this is the video for you, so stay tuned. My name is Kelvin McNeil, licensed mortgage loan officer, NMLS number 2018085, and welcome back to my channel. This video will be straightforward, but before we dive in, make sure you check out the previous video that I did where I talked about the differences between a home equity line of credit and a cash out refinance. If you haven't seen it, I'll go ahead and drop a link to that video in the description below, as this video right here is essentially the sequel. Now let's talk about the NFTYDoor home equity line of credit brought to you by Homebridge Mortgage. Now with this HELOC, you'll be able to tap into up to $500,000 worth of equity in the first lien position and $350,000 in the second lien position. The maximum DTI for this HELOC is 50%, and the eligible properties include single family, 2 to 4 unit properties, PUDs, and condos. There's a 5-year interest-only draw period with a 25-year repayment period. And the minimum loan amount for both first and second lien positions is $25,000, and there's no prepayment penalties. I told you this video is going to be straightforward, so keep up. Nah, I'm just kidding. But feel free to hit that pause and rewind button if you need to take notes. Now, before you ask, yes, I'll let you know how to qualify, and we'll dive into the eligibility requirements. But first, let's talk equity. As you may know, the maximum amount of equity will be limited based on 3 key factors: your credit score, the occupancy type, and the combined loan to value, otherwise known as the CLTV. So to make things easy, let's pull up a chart. Now, as you can see, the LTV ranges from 80% and it goes all the way down to 55%. If you look closely, you'll notice the higher the credit score is, the more equity that you can tap into. On the other hand, you'll also notice that lenders prefer to lend to borrowers with owner-occupied properties versus investment properties or vacation homes, or otherwise known as secondary properties. This is because there's a housing shortage, which temporarily makes it harder for investors to continue to build their portfolio. Under this shortage, some lenders would much rather help homeowners who are just wanting to consolidate debt or renovate their bathrooms, for instance. And it's important to highlight the major role your credit score plays in your ability to get approved for a HELOC. Now, remember, keep your eyes on that chart. Credit-wise, this HELOC application requires a soft pull with Experian from the primary borrower, and you'll need to have a minimum FICO score of 640. However, let's say your Experian FICO score is a 670. As shown here, for an owner-occupied property, let's say if your CLTV is at 78%, you would be denied because your max CLTV would be 70%. But if your scores are above 700, you will be approved with that same 78% CLTV, because the maximum CLTV for someone with a credit score above 700 is 80%. In addition to credit scores, you should have no 30-day late mortgage payments or rental payments in the last 6 months, and no more than one 30-day late in the last 12 months. Lastly, you should have no bankruptcies in the last 4 years. Now let's talk about how your income plays a role in qualifying for the NFTYDoor HELOC. Now remember, in the beginning of the video, I stated your DTI should not exceed 50%. We'll be verifying your income by linking to your employer's payroll system if you're a W-2 employee, or linking to your bank account if you're self-employed. However, if you're a business owner, you'll also need to provide the last 2 years of your tax returns. The application itself is done online, only takes about 5 minutes to complete, and the pre-approval process is very simple. If you would like a risk-free quote, you can simply head over to tinyurl.com/nifty HELOC, which is spelled NFTYHELOC, or click the link in the description below this video and I will personally serve as your licensed loan officer to help you get funding in as little as 5 business days. It's important to note, although there will be a soft credit check again with Experian, you should make sure that your Experian credit report isn't locked and any fraud alerts are lifted before applying to avoid any unnecessary delays in processing your application. If you have any questions about this specific HELOC program or about credit in general, please share your thoughts down below in the comments. And if you found this video helpful in any way, please do me a favor and show me some love by dropping a like, subscribing to this channel, saving and sharing this video with like-minded individuals. And as always, guys, you know the drill. I hope you enjoy the rest of your morning, afternoon, or evening, whatever time of the day it is. Thanks for watching and see you guys on the next video.